Even as gold settles near all-time highs, one analyst sees the metal's rally continuing through the summer. Spot gold leapt as high as $1,944.55 on Monday, setting a new intraday record amid investors' widespread push into safe haven assets. The metal's current momentum will cross the $2,000 an ounce mark, as investors brace for inflation to rise, Vivek Dhar, mining and energy commodities analyst at the Commonwealth Bank of Australia, said on Monday. A high inflation environment weighs on Treasury yields and, in turn, boosts the relative value of gold. Understanding how inflation will change is really the key to judging the gold rally's future, Dhar said on CNBC. Watch gold trade live here. Spot gold surged on Monday to a record intraday high, and analysts are already preparing for the precious metal to rally even further. Prices leapt as high as $1,944.55 on Monday in early trading, beating the previous all-time record set in 2011. The popular hedge asset has ticked higher through the summer as investors look to protect against a near-term market tumble. Federal Reserve easing, including near-zero rates, asset purchases, and liquidity injections boosted gold prices as well by raising the metal's relative value against the dollar. The collection of bullish drivers could push prices up even higher into the fall, Vivek Dhar, mining and energy commodities analyst at the Commonwealth Bank of Australia, said Monday. We think the current momentum in the next few months will cross the $2,000 an ounce mark. The key question is how much does the rally increase after that, he said on CNBC's Squawk Box. Read more, Goldman Sachs. Stocks have never been more vulnerable to the failure of a few mega companies, and the risks of a blunder are quickly piling up. Much of that momentum is fueled by concerns of rising inflation, the analyst added. Markets are pricing in a steady rise in inflation due to the Fed's relief measures and multitrillion-dollar stimulus bills from Congress. Higher inflation weighs on real Treasury yields. Lower yields historically benefit gold, as the metal's holders no longer miss out on yields. The key story behind gold's summer rally isn't falling nominal yields, Dhar said, but an increase in 10-year inflation expectations. That's really what's driven this recent leg up. Understanding how sustainable that is really the key to unlocking whether this rally has more legs to run, he added. Dhar sees gold's rally slowing above $2,000, with investors pausing on their buying activity until a new driver emerges. Yet he still sees a path for gold to leap higher. The Fed has paused on announcing new relief efforts since taking its 9 credit facilities online. Gold can climb as high as $2,500 per ounce, Dhar said, but for that to happen, we really need to see the U.S. consider an option like, say, negative interest rates. Investors likely shouldn't hold out hope for such an event.